For fans, it goes even further.
筋肉って楽しいがないので、だからみんな楽しいを作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the BowFlex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, And my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the move HR burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like
feathering
me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
You want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment question and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior, and we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from my home in New Jersey, streaming on YouTube. It is Monday, November 2nd, 2020. We like to call it Election Day Eve. Millions of Americans we know have already voted, but we know it is not over until it's over, far from over, as many of the political experts would tell us. All right, we're going to get to lots of things over the next few hours, including a look at the markets, because stocks were moving higher. We're now off our best levels of the session, a little bit of a mixed market, investors confronting rising virus cases globally, and really that possibility of that uncertain election outcome. The key issues on both coming up. First up, though, let's get you going on this Monday with a check on the trading day. Here is Charlie Pellet.
Hi, thank you very much, Carol Master. Happy Monday to you. NASDAQ, in fact, worst level of the day right now. Let's get right to the numbers. I'll give you the why in a moment here. NASDAQ down 78 points. That is a drop of 0.7%. S&P up by 10, a gain there of 0.3%. The Dow higher by 201 points, up 0.8%. Got to keep in mind, though, that the best level of the day, the Dow have been up 541 points, up 2%. S&P have been up 60, have been up as much as 1.8%. Stocks did pair gains as shares of tech bellwethers, Apple and Amazon extended losses. Treasury yields dropped, the dollar touching a one-month high. As for Amazon, down now by 2.6%. Apple down 1.1%. 10-year up 11/32, 10-year yield 0.83%. Gold up 0.7%, 18.92 the ounce. West Texas Intermediate crude up 1.5%. 36.33 a barrel. Recapping stocks mixed, S&P up 13, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Do want to get right to the Business Week agenda. Charlie giving us that overview on the trade today. With us is Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. She's on the phone in New Jersey. Also from New Jersey on the remote access is Dave Wilson, Stocks Editor at Bloomberg News. You know, so here we are again. The markets started off stronger, but we were definitely off our best levels of the session. And we do see, as Charlie mentioned, that NASDAQ lower. Gina, you've been writing a lot about this. We focus a lot on the elections, but you really are focusing on earnings.
Yeah, and the reason, Carol, we're focused on earnings is because I think what's happening in the market is as much about rotation between market leaders at the sector level as anything else. I do think the election has certainly got some nerves frayed, and you see that in the VIX and VIX futures markets sort of escalating over the last couple of weeks, but also underlying that overall nervousness is a rotation in leadership out of technology and into other sectors. We talk about the market being, you know, just kind of blah today, not up a whole lot anymore after a pretty strong start. The reason is because tech stocks have sold off. If you look at the other sectors, energy stocks are up more than 3%, materials and industrial stocks are up greater than 2%, but it's really tough for the broad S&P 500 to rise without the participation of the tech sector, and that's an earnings thing. So even though earnings have beat expectations, the tech stocks have sold off. Why have they sold off? Because their earnings outlook is deteriorating a little bit. Other sectors are going to produce faster growth into 2021, and that's diminishing the case for paying very, very high valuation multiples for tech stocks.
And logically, right brain, left brain, you know, if we look at it, Gina, I mean, it makes sense considering the run-up that we've seen in these tech names. And performing to support some of it.
Yeah, absolutely. And the reason that, I think you also want to think about the reason behind the run-up in the tech names. You know, going into second quarter and even much of third quarter earnings, they were the only game in town. They're the groups that were actually still printing revenue and earnings growth. That dynamic will change going into 2021. So the investment opportunity set improves. Tech stocks deserved a high valuation multiple relative to the market when they were the only stocks in the market creating earnings growth. And they were the only stocks, you know, the very defensive sort of portfolio really included a heavy tech concentration. Well, now that we're moving into a different kind of landscape, it looks like the opportunity set will improve for other groups, and those groups are more value and cyclically oriented segments of the S&P.
I'm going to ask you how much that cycle will last in a moment, but I do want to bring in Dave Wilson and talk to us about this rotation. Dave, what are you seeing?
Well, that's it. I mean, if you think about tech in the broad sense, I mean, it's not just information technology, it's also communication services where you find, you know, Google's owner Alphabet, Facebook, and then the consumer discretionary category that includes Amazon.com. Those are the only three groups that are down today along the 11 main ones in the S&P 500. And there are plenty of stocks doing just fine after earnings. So, you know, what you're seeing is sort of consistent with the idea that, you know, it's those big tech companies have been driving the market, and you know we've seen them come off lately. I mean, Sarah Ponzek, I saw her chart out earlier today. I know she'll be on this program later on. Just noting that if you go through those 11 main industry groups in the last month, tech has been the worst performer. So you know it's kind of consistent with what we've seen lately in the way things have kind of been shifting around, but it certainly isn't working to the market's favor at the moment.
I know some value guys would be really happy to see some market rotation. Gina, come on in though. How long might this cycle rotation last? Like, I do wonder how much of it is contingent upon the economic recovery, what we see in terms of more relief. Like, I feel like there are some questions what 2021 looks like, which will determine who will continue to be the market leaders.
Yeah, I think that's a very, very good point. If you look at the outlook for earnings as a pretty good benchmark for what to expect, tech is going to undershoot earnings growth for the majority of 2021, which means this could have legs for, you know, at least until the second quarter of 2021. I think come first quarter, a lot of this will depend on who's in the White House. You know, clearly a blue wave is going to, in my mind, continue the trends that have started in the market of cyclical rotation, because it most likely does mean that we get a pretty large fiscal policy package sometime in the first quarter. So even if in the short term you don't get any fiscal policy, investors are going to count on that fact come early 2021, and that's going to keep the value rotation moving forward in my mind. You know, and then also depends on how much we shut down again. You know, obviously Europe is is shutting down again. Most of us are assuming that the United States generally will stay open, allowing for reasonable economic conditions to maintain through the winter, but that's a wild card. We could have a much more difficult economic scenario in the short run. Even then, though, I think most investors are going to take that opportunity to add to cyclical earners in anticipation of the policy outlook for 2021.
I gotta say, I saw that France number, heard it this morning, not this morning, I think it was about 1 o'clock or a little bit after 1 our time. I mean, a record more than 52,000 new coronavirus cases, and it certainly made me sit up and take notice, Gina.
Yeah, absolutely. And I think a lot of people are taking notice and kind of wondering what our response is going to be as we head into the winter. And, obviously the escalation in infections in the U.S. is problematic as well. Will a new administration, clearly this new administration would approach the virus contagion potentially differently than the past administration if we do have a new administration in the White House next year. So there's a lot of uncertainty without a doubt.
Yeah, exactly. And Dave, that kind of leads us to our chart. Quick tweet tease on what you got coming up in the chart of the day, because it is election related.
Yes, it is. I mean, think about all the law and order issues that have come up during this race. And, it's been a plus for the companies that make guns and ammunition.
Watching this connection always just kind of blows my mind. All right, Dave Wilson, we're going to look forward to that. Thank you so much. Dave will be back a little bit later on. Gina Martin-Adams, our thanks as always, Chief Equity Strategist at Bloomberg Intelligence, both of them joining us on the phone from New Jersey. Man, do we have a jammed-packed broadcast. We are obviously watching the Midwest because of the election. We're also watching it because of the virus, where cases and hospitalizations are rising. So we've got it covered. We're going to check in with our Bloomberg News political contributor, Jeannie Zaino. She's going to talk about the campaign. We've got Dr. Penny Wheeler, who is president and CEO at Alina Health. She's going to talk to us. They are seeing what's going on in the Midwest front and center. And whether it's COVID or the elections, folks, we know this. Facts matter. So back with us on that is Poppy McDonald, president of USA Facts. We've also got the founding partner and president of Bespoke Real Estate. Are people really leaving the city for the burbs? We're going to talk about that. And then we all need a little bit of a comic relief. We've got the CEO of Comic Relief US back with us, Allison Moore. So looking forward to all of that over the next few hours. We do want to quickly do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number, it's a big one, $3.2 billion. Fortress Investment is postponing its plan to build a train to Las Vegas from California after failing to sell a record $3.2 billion of unrated municipal debt. Fortress reduced the size of the offering to $2.4 billion to try and bring in those investors, but there's, quote, not a lot of liquidity, according to the California treasurer, saying the state will take back the bond capacity and offer it to other projects. All right, sign of the times. Let's get a check on world and national news. Let's check in with Nancy Lyons. Hey, Nance.
Hey, Carol. There is just one day until the election. More than 93 million people have already cast their ballots. Polls show Joe Biden leading the race in Pennsylvania, Florida, Arizona, and Wisconsin. John Lieber is Eurasia Group's managing director for the U.S.
The polling indicates that Biden's winning the early vote by about 2-1, and Trump's likely to win the in-person vote by about 2-1. Unfortunately for President Trump, the numbers in the in-person vote just won't be enough to make up that massive early mail voting lead that we think Biden has in this moment.
Well, both presidential candidates are on a breakneck pace to motivate voters. President Trump is covering 4 crucial battleground states today. He's already been in North Carolina, next is Pennsylvania, then Michigan and Wisconsin, while Joe Biden is appearing in Ohio and Pennsylvania, where he'll wrap up with a drive-in event with Lady Gaga in the Pittsburgh area. Well, the Supreme Court is welcoming its newest member today, with Chief Justice John Roberts introducing Amy Coney Barrett.
Justice Barrett has taken the oaths prescribed by law, and her commission will be duly recorded. At a later time, we will have a special sitting to mark the occasion. Justice Barrett, we wish you a long and happy career in our common calling.
The justices heard a case today involving the Sierra Club and the U.S. Fish and Wildlife Service. Barrett will likely face greater scrutiny Wednesday when she participates in a case involving the rights of LGBTQ people. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week on this Monday. Carol Master, and joining me right now is Charlie Pellet. Both of us have kids in schools in New York City. And what's interesting, and I keep having conversations about this, Charlie, is that it's interesting, and we're talking about the public school system in particular. The system school buildings have proven to be havens of public health safety, almost devoid of infection. After about 63,000 tests in 1,200 schools, just 69 were positive for COVID-19. This coming from Mayor Bill de Blasio on Friday. And yet, parents are hesitant to send their kids back for in-classroom learning.
Understandably so. All of this so part of an effort to reassure parents that it is okay. What New York City is trying to do is move ahead with a blended program that calls for socially distanced classrooms and also a contact tracing program, and also a requirement that the citywide transmission rate stays below 3%. And of course, city officials, they want to get kids back into classrooms.
Totally.
That is the best way to learn. You know, on the other hand, though, teachers, administrators, principals, they've got a lot of issues that they're raising about getting kids back into the classroom.
Well, what's tough, too, is it just began today. It's only, I guess, opt-in period for remote school students who want to give a blended program a shot. And if they don't switch by November 15th, so just a week from now, they will be remote for the rest of the school year. And what we're finding out, right, we've been talking about this, Charlie, is that when you're not in classroom, it's not the same experience. It's not the same learning experience. And they're finding that with kids, and they're worried about kids kind of getting left behind. Your son, is he in school or is he hybrid?
He is hybrid right now. Yeah. Actually, he's just doing his first year of college. And we've got him up in New Haven studying by remote learning at a school, and he's not going to Yale, which is probably what you thought right off the bat there, but he's going to a school in Maryland, and he's with a high school classmate, and that's what they're doing. They're being safe and doing via remote learning from a remote location.
We're all trying to figure it out and keep everybody safe in the process. All right, Charlie, thanks.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A mixed Monday. The Dow, the S&P higher, NASDAQ lower, stocks trading off session highs as defensive sectors such as technology declined, energy and materials gained ahead of the presidential election. Treasury yields dropped. The dollar touched a one-month high. Here's where we stand. S&P 500 index up 15, a gain of 0.5%. The Dow down up 246 points, up 0.9%. Have been up as many as 541, up by 2%. NASDAQ on the minus side, down 62 points now, a drop of 0.6%. NASDAQ 100 index by comparison, down 0.7%. 10 years up 10/30 seconds, 10-year yield 0.84%. Gold up 0.8%. 18.93 the ounce. And West Texas Intermediate crude oil up 1.8%, 36.42 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. So much to get through in terms of the virus. And I've got to say, we are seeing big surges, numbers rising, especially in the Midwest, whether it's North Dakota, South Dakota, Wisconsin. Wisconsin, in fact, I think is third behind North Dakota and South Dakota when it comes to new cases per capita. Nebraska and Iowa also up. And a look at some of the averages over the past week in Minnesota, the trend in new COVID cases and hospital admissions also upward. Let's get to someone who has really been so wonderful with us throughout the pandemic. Back with us, and we know she's busy, Dr. Penny Wheeler. She's president and CEO at Allina Health. They've got 12 hospitals in the Minnesota area. They've got physicians, clinics, retail pharmacies throughout the Twin Cities, metro area in eastern Minnesota. She joins us once again on the phone from Minnesota. Dr. Wheeler, great to have you back with us. How are you?
Thanks, Carol. It's good to be back with you. Yeah, it's anxious times here as we see those case counts go up and the hospitalizations go up as well. So there's some anxiety about that for certain.
I am wondering what are the conversations, Dr. Wheeler, that you're having? You know, I mentioned the number over in France. We're watching Europe. I think everybody in the U.S. is wondering, okay, is this where we are headed? France reporting a record 52,518 new coronavirus cases. That's a big number. And I wonder, are you guys setting up, or the facilities within your system and that you are involved with, are you guys anticipating another big surge or seeing it already?
Yeah, we are. We are starting to see it already. I would say that, in our, in Minnesota, you just mentioned, Carol, the surrounding states to Minnesota, all the Dakotas, Wisconsin, and Iowa. Right. They've all had about a higher than 20% positivity rate. We've been creeping up, and we've been seeing it around our border towns, too. But we're in about 8% positivity rate. And I can tell you our hospital takes care of about a quarter to a third of all those in Minnesota affected by the virus. Wow. And we have doubled our census in COVID cases over the last 2 weeks. So it's coming quickly. Yeah.
What's I'm curious, certainly in some of the conversations we've had within the medical community is that we didn't have the playbook back in March, right? We were just scrambling to figure it all out, get the equipment, get every, the places, get the systems, the necessary systems in place or the equipment in place. I do feel like we are smarter now, and I hope so, but I do wonder, what are you seeing, or what have we learned from the past 6 to 7 months, whether it's equipment but also treating patients?
Yeah, totally smarter in how we're treating patients and supporting other organ systems and knowing how to treat them. So fewer people who are in our intensive care units are actually succumbing to the disease and dying. So that is good news, because we've learned more and we have more treatments and more support available. We do have right now the stuff available. We're increasing testing significantly. I'll tell you, the biggest challenge for us is staffing. Staffing this appropriately for the surge, because, of course, some of our healthcare workers are also people who are getting ill or having family members that are ill. So a plea would be, boy, please do the distancing and masking. I know it's getting old and hard, but you're also protecting our healthcare workers significantly by doing so.
I think it's really interesting that you're saying that, because I had a conversation actually with the CEO of Chipotle last week, and I said, same thing. What has changed in your world since March and April in terms of the virus. And he said one of the most recent challenges is that our own employees are getting sick, and it makes it harder to run the restaurant. And I do think this is going to be maybe the story for the second, third waves is, making sure that whether it's in healthcare, whatever industry, that we've got the necessary workers. And I know in healthcare, it's critical.
Yeah, critical to just really the health of the community and our ability to treat people. So I worry that our capacity limitation will be healthy, available staff.
So
that will be what limits. It won't be on the PPE right now. It looks like it won't probably be on the testing. It will be on that.
So what do you do? Can you reach out to, or what do you do? Do you reach out to your surrounding community, but they're also facing the same thing? Is there federal assistance that can help in this kind of situation?
We're not looking to federal assistance, but we are collaborating wonderfully well among, the systems here, so that we're trying to just balance things out. If somebody doesn't have ICU availability, who does? So we're not, this is a time again for collaboration, not competitiveness. And then we're continually working with each other. Like 2 of us are involved, for example, in vaccine trials that are going on. So we're trying to be proactive about enrolling people in those trials as well.
Yeah, I do wonder, that, like I said, that this is going to be one of the main stories at this point. I do wonder, too, that one of the things that we saw, certainly when we were in the midst of it here in the New York metro area, that there was really this great kind of sharing of equipment, sharing of knowledge. And, what are you seeing, as you deal with the entire, healthcare community, or are you seeing that continued cooperation and assistance around the country?
We're seeing collaboration and cooperation here in spades. And while you can manufacture equipment, what you can't do is manufacture talented, compassionate staff. And so again, that's the area that I think all of us are most concerned about.
All right, we're going to continue talking about this because there's a few more headlines I'd like to get through. Dr. Penny Wheeler is with us. She's president and CEO at Allina Health. As I mentioned, they've got 12 hospitals in the Minnesota area. They've got 65 clinics, 15 retail pharmacies. We're talking about a system with, I think it was back in 2018, operating revenue of about $4.5 billion. So a massive system, and they are seeing a lot. We're going to get back to her in just a moment. You are listening to Bloomberg Business Week. I'm Carol Masser, and a quick check. As we mentioned, the markets a little bit lower, definitely off our lows of the session. A bit of a mixed trade, although we are seeing a little bounce off the bottom, just down a hair on the NASDAQ. Up about 1.25% on the Dow Jones Industrial Average, and the S&P 500, it's about a gain of 0.8%. This is Bloomberg Business Week. I'm Carol Masser. We'll continue with the latest on the virus right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, you are listening to Bloomberg Business Week on this Monday. A lot going on this week. And, of course, the elections, the virus, and so much more. We're going to get back, though, to the latest on the virus and also the race for a vaccine. We'll get back to Dr. Penny Wheeler over at Allina Health in just a moment. Let's get back, though, to your top business stories and Charlie Pellet.
All right, I thank you very much. Indeed, a lot going on today, right through the week. Of course, the Fed meeting, jobs report on Friday as well. Tech shares, they are declining right now. Energy and materials sectors gaining. Some investors anxious ahead of tomorrow's presidential election. Treasury yields dropped. The dollar touched a one-month high. After the worst week since March, dip buyers failed to sustain an early rally. Mega-cap tech shares again under pressure. Right to the numbers with the S&P lower now by 25 points, down 0.2%. The S&P is holding on to a 27-point gain, up 0.8%. Have been up as many as 60 points, up 1.8%, but again, a gain now of just about 0.8%. The Dow up 341 points, up 1.3%. At the best level there, the Dow was up 541, higher by 0.2%. 10 years up 9/32, 10-year yield 0.84%. Gold up 0.8%, 18.94 the ounce, up 15.60 right now. Crude advancing 2.9%. West Texas Intermediate up 103 a barrel, $36.83 right now for West Texas Intermediate crude. A coronavirus vaccine under development from Germany's CureVac showed a good immune response system in early trials, validating the biotech company's 20 years of research into messenger RNA's ability to train the body's defenses. Shares of CureVac, today they are trading lower, however. CureVac down now by just about 4.3%. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Television this morning, she talked about the race for a vaccine.
The key to the vaccine, though, is making sure that people take it and trust it and possibly may need to take it multiple times, like a flu vaccine, depending on the type of vaccine that ultimately becomes developed and used. So I think the vaccine is absolutely the number one priority right now.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Citigroup says it will serve as financial advisor to an initiative that is seeking to develop, manufacture, and distribute COVID-19 vaccines globally. The bank says it was selected by Gavi, that is the Vaccine Alliance. Citigroup shares up now by 2.5%. After the bell, Cirrus Logic, Rambus, Arista Networks, PayPal, and Trivago Networks. Again, recapping equity. Mixed, S&P up 25, up 0.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
That's right. Still lots of earnings to come. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar. Let's get back to our guest, Dr. Penny Wheeler. She's president and CEO at Allina Health. She is still with us on the phone from Minnesota. Dr. Wheeler, one thing I wanted to know is, in terms of those getting the virus, are the demographics changing? Is it older, younger? Is it a mixture? I'm just curious what you guys are seeing.
Yeah, the demographics aren't changing in terms of those disproportionately affected who are Black, Indigenous, people of color. So that's not changing. We are seeing a slight shift to younger people getting the virus, but otherwise the profile. And obviously, most of the very severe illnesses and sadly the deaths occur in those who are in the older age groups or those who have chronic illnesses. So that's staying the same.
Yeah, so very, very similar. Listen, you know better than most, it's all about, a vaccine, although when I'm curious how you feel about this. I feel like we continue to have conversations where more and more members of the medical community say, yep, a vaccine is very important, but also really important is wearing your mask, social distancing, doing all those simple things that can really make a difference in terms of our fight against this virus.
Well, no question. Overemphasizing those over and over again. I heard one of your wonderful masks, public service announcements while I was waiting. That's so important. The vaccine is important. It's not an end-all, be-all, though. We're involved in a Johnson & Johnson ensemble vaccine trial with enrollment of people, and we're actually participants, especially focused on populations of color, Black, Indigenous, and people of color as participants, targeting specific zip codes. Sometimes these studies are done too much on a more of a white population, and this is disproportionately affecting people of color. So we're actually targeting and asked to target our vaccine trial accordingly. And then I think, Carol, you said it just right. On the other side of things, we want a vaccine that can be trusted for sure and that has safety. And that trust is important to people being able to actually get the vaccine. But remember, even great flu vaccines aren't 100%, successful.
Right.
And then there's a proportion that doesn't take them. So, I also don't want people to think that it's, we're flipping a switch and it's all over at that point, too, even when we get a safe one.
Well, and that's a really good point. But I also think, we continually talk, Penny, about that when we get a vaccine, we've got to make sure it gets out to those most vulnerable populations. Sure. As you guys are targeting, you said some zip codes specifically of, Black and Indigenous, color people. And I do wonder, do you have a lot of faith in the system that when it gets to, distribution, logistics, that it will get to those people who really need it most? And what do we need to make sure that that happens?
Boy, I do believe that will be true. I'm an optimist at heart, but I think that those people who are most vulnerable and most willing, those in institutional settings that are elderly, those who are disproportionately affected, I think their acceptance rate will be higher. And when we have a vaccine that we can trust, I think that will be going. I don't know that we will have widespread vaccine available, right off the bat. But I think that those populations, because of the that the vaccine won't be widespread yet, will be the first one targeted for sure.
One last question. I wonder what might surprise some of our listeners, especially here we are, 8 months in of dealing with this virus, and you've seen it, like I said, front row seat, for better or for worse. What would surprise everyone about this fight, especially as it goes on?
I'd have to say our staff. The resilience of our staff, putting themselves on the line every day to try to care for others and going there day after day, despite their own personal fatigue. Obviously, this is affecting us all personally as well as professionally. And all that brings, and having school-age children that they're schooling at home, and then coming and trying to take care of people, they are remarkable. Just remarkable. So I don't know that that's a surprise to everybody, but when you see it day after day after day, you the human spirit and its resiliency in trying to work on behalf of others is pretty incredible.
Well, I'm guessing as a leader, it's nice to see your staff, right? Really just be out there, especially when everybody is stressed out on so many different levels. Penny, thank you so much. Dr. Penny Wheeler, she is president and CEO at Allina Health, joining us once again on the phone from Minnesota with a virus update, and just talking about the collaboration that they're doing with Johnson & Johnson as well, and really targeting some of the specific zip codes, the specific, and most vulnerable populations. All right, let's get back to world and national news. For that, it's over to Nancy Lyons in our 99.1 newsroom. Hi, Nance.
Hey, Carol. Well, the presidential candidates are covering a lot of ground today, the last day of campaigning. President Trump will be going to 4 battleground states. He started in North Carolina.
Tomorrow we are going to win this state, and we are going to win 4 more years in our great White House.
Trump also is visiting Pennsylvania, Michigan, and Wisconsin. Democrat Joe Biden started his day in Cleveland, where he criticized President Trump for allegedly calling our troops losers.
Donald Trump's not strong, he's weak. This is a president who not only doesn't understand sacrifice, he doesn't understand courage, physical courage, that takes for so many of you to put on that uniform.
Biden is now speaking in Pennsylvania and will wrap up his campaign in Pittsburgh with Lady Gaga. So far, Biden is maintaining his lead in Pennsylvania, which is shaping up to be a pivotal state for the presidential election.
Democratic nominee Joe Biden holds a 7-point lead in his home state of Pennsylvania in a Monmouth University poll released just this morning, 51% to 44%, with more than 2.4 million early votes already cast. Biden and Trump are both campaigning in a last-minute push in Pennsylvania, where votes aren't tallied until after the polls close, so it may be a while before we know who wins the critical state. Our election night coverage begins at 7 p.m. Wall Street time here on Bloomberg Radio. In Washington, I'm Amy Morris, Bloomberg Radio. radio.
Twitter says it will not allow candidates to claim victory themselves tomorrow night, saying any tweet of victory will need to cite state officials or at least 2 authoritative national news outlets. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser joining me right now is Charlie Pellet. Charlie, this story is the most read on the Bloomberg in the past hour, and no surprise, it has to do with Ken Griffin, well known to our audience and certainly Bloomberg terminal users. But, you know, like many investors, you go back to March, and, you know, it was this crazy market, a volatile market, right? And everything, stocks tanked, bond markets were kind of all over the place. And Ken Griffin, who runs a bunch of hedge funds over at Citadel, they were bleeding money. His computer models that really guide some of their decisions really struggle to figure out, okay, the impact of the pandemic, what does it mean? How long does it last? How does it impact, areas? And then he kind of figured it out.
And indeed, just to be clear, Carol, his flagship fund actually reversed those losses back in the dark days of March. Since then, it has kept going, according to our story. The Wellington Fund up more than 20% through October. Assets of the hedge fund business swelled to $35 billion. Got to keep in mind that about $6 billion of that belongs to Griffin. One of the things I learned from the story, by the way, Griffin started trading convertible bonds from his Harvard University dorm room.
It's pretty wild, right? It's like the equivalent of the tech startups, right? Starting in your garage or something, but it's for the financial community. It's a great story, and I love this quote. Apparently, he was at an event last week for the Robin Hood Foundation, which is a New York-based nonprofit. Our audience knows about that. We've talked about it. He said it was a macro trader's dream, and he said after taking some losses, he put money to work when people are panicking. That's what he wanted to do. And so he checked out the beaten down credit markets, he snapped up finance company debt, and he took advantage of really just the wild fluctuations that we were seeing globally. I mean, that's what traders love in general, right? When the markets move, that's how you make money or lose money.
Exactly. When others see risk, that's the opportunity to strike. And by the way, according to the Bloomberg Billionaires Index, he saw an almost $5 billion increase in his fortune in 2020, now up to more than $20 billion.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ now trading a little changed. It is down by less than a point. Let's give you the numbers. I'll give you the Y in a moment. S&P up 34 now, higher by 1.1%. A push higher for the Dow Jones Industrial Average, up 409 points now. That is a gain of 1.5% at the best level of the day. The Dow have been up 541, up by 2%. So again, NASDAQ now trading a little changed. It is a mixed Monday. Technology shares declined. Energy and materials sectors gained. Some investors anxious ahead of tomorrow's presidential election. Treasury yields dropped, the dollar touching a one-month high. Right now we have got the 10-year yield at 0.84%, up 830 seconds. Gold up 0.9%, 18.94 the ounce. And West Texas Intermediate crude up 3.4%, $37 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So we've talked about this, I feel like, with several business owners, many in the restaurant space, including Danielle Ballou. It affects all kinds of industries, businesses, all sizes of businesses. It's really about how the big insurance companies have, by and large, refused to pay business interruption claims. This next story gets into it. It's going to be featured in this week's issue of the magazine. Let's get into it. Bloomberg News legal reporter David Yaffe-Bellany joining us on the phone from Washington, D.C., along with Bloomberg Business Week editor Joel Weber with us from Brooklyn. I feel like, Joel, the stakes here are enormous for everyone involved.
Yeah, that's right. And when David came to us with this pitch, I think he really just immediately got our attention because we're about to see a case brought to a court by an attorney in New Orleans. And it is basically the shot across the bow, and I think all eyes are going to be on it because it will be it's basically business versus insurance. And there's probably billions of dollars in the sway in terms of how this one sways effectively. And he happens to be an incredibly colorful character as well, so that made the story that much more enjoyable to read.
It's a movie in the making, I have to say.
Exactly. David, who is this lawyer that we're talking about?
He's a plaintiff's lawyer in New Orleans named John Hoteling, who's basically been suing insurance companies after major disasters since Hurricane Katrina. So he has a track record of representing businesses in coverage disputes, and this dispute over business interruption insurance is sort of the latest iteration of that.
And how much money could we potentially be looking at here? Like, what's involved in this particular case, and then what cases to come?
So the amount of money in this particular case in New Orleans isn't entirely clear yet because the restaurant that he's representing hasn't actually filed a claim. They're preemptively suing to kind of establish the legal precedent that insurers should be on the hook for damage caused by the pandemic. But if you broaden this out to all the businesses across the country that have business interruption insurance and are suing to force their insurers to pay up, one industry estimate puts it at between $52 billion and $223 billion a month that insurers would have to pay to cover the damage caused by the pandemic. And the argument that the insurance industry is making is that this would essentially wipe out their reserves. It's just not feasible for them to cover this many claims.
I have to say, I mean, this kind of gets to, like, why do you have insurance, right? And this whole idea of unprecedented when it comes to acts of either natural disasters or, just unexplained events. And I feel like that's going to be talked about a lot, David, when it comes to these cases.
Yeah, absolutely. I mean, the other argument that the insurers keep making is that this is totally unprecedented because we've had catastrophes in the past, but they're isolated to a certain geographic region. There's a hurricane in New Orleans which destroys businesses there, but at least it only affects one city or a few cities. Whereas the pandemic is like a hurricane happening in every city in the country at the same time, and every business in the country is disrupted in a major way, and it's just not possible for the insurers to respond. The interesting thing is, the pandemic took most parts of American society by surprise, but actually the insurance companies have anticipated this moment for a couple of decades after after SARS, a few of the insurance companies were forced to make big payouts to companies in China that had to shut down during well, SARS was sort of raging through Asia in the early 2000s. And after that, insurance companies inserted language in some of these policies that seems to exclude damage caused by a virus from coverage. And part of the legal battle is whether that language should actually apply to the pandemic. There are also policies that don't include that sort of language. So the insurance companies have been thinking about this for a while. So they're not entirely unprepared as this kind of legal battle ramps up.
Okay, David, can we talk about the Lambos?
Yes.
I said this guy was colorful, and literally he has colorful cars. What is with the Lamborghinis?
So John Hoteling is a big luxury car enthusiast. He has an extensive collection of Ferraris and Lamborghinis. He told me that as a child growing up in New Orleans, he had a catalog, a kind of Lamborghini catalog or buyer's guide that he would flip through as a kid, sort of fantasizing about cars that he might be able to afford one day. And he kept this catalog, and when he actually became really wealthy, after winning tons of big cases in the early 2000s, he went through this catalog and decided that he would buy every single model of Lamborghini advertised in it, and that was 17 Lamborghinis. And so he's got those parked at a garage near his mansion in New Orleans, right near this famous Garden District. And he's added to it over the years. He races luxury cars. He races them in a big race in Italy every year. So it's a pretty vast and impressive collection of luxury vehicles.
What's he like, though? I mean, it sounds like, just first of all, it is like reading a novel, your story. But just the dinner that you start off with, what is he like? I mean, how real is he?
He's a real person, and he's really passionate about this cause. I mean, he's not somebody who just showed up on the scene and started suing insurance companies because he thought that this was like the biggest chance to make money off the pandemic or something like that. He's been kind of an advocate on behalf of insurance policyholders since Katrina, which happened in his hometown. He's really knowledgeable about these issues, and he's done a lot of work to sort of unite different types of businesses around the country in various lobbying efforts to get laws passed that could enforce insurers to pay out. So for him, it's a kind of really personal battle,
right.
And not just kind of a moment of opportunism.
I just have to say, I love how it wraps up that while the insurance companies are saying, wait, this could kind of knock us, out of business too, it feels like. He's saying, I love the quote, that, if I hit them 1% enough to buy a fleet of Ferraris and a private jet and houses all over and a humongous mansion with tens of millions in antiques in it, they don't care. It's a drop in the bucket. I mean, it's kind of interesting to hear his take on this, and he sounds like quite a character. All right. It's definitely a must-read, and everybody should check it out. David, thank you so much. David Yaffe-Bellany, he's legal reporter at Bloomberg News. Check out the story at Bloomberg.com, and on the Bloomberg, it'll be in the current issue or the upcoming issue of Bloomberg Business Week magazine. Joel Weber, thank you as well, editor at Bloomberg Business Week, joining us on the remote access from Brooklyn. So a great story. I'll put it out on Twitter as well, because it's interesting. This is one of the big issues. We've talked with Danielle Ballou. We've talked with a lot of folks in the restaurant industry who were counting on their insurance policies to kind of help them through, and then kind of had a harsh awakening to see that they weren't necessarily covered. And as we know, the restaurant industry, razor thin in terms of margins, and a lot of them just on the edge. Any of the smaller players, it's been really tough. But it's not just restaurants. It's all kinds of businesses. And that is certainly what this case is all about. All right, you are listening to Bloomberg Business Week. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. U.S. stocks are trading mixed. Technology shares are declining. Energy and materials sectors gaining. Some investors anxious ahead of tomorrow's presidential election. Treasury yields dropped. The dollar touched a one-month high. After the worst week since March, dip buyers failed to sustain an early rally. At one point, we had the Dow up 541. That would have been a gain of 2%. Right now, we've got the Dow up 390, up 1.5%. The S&P's up 30. That is a gain of 1%. NASDAQ lower by 11, a drop now of 0.1%. 10 years up 8/32. 10-year yield now 0.84%. Gold is up 0.8% at $18.94 the ounce. West Texas Intermediate crude up 3.3%. $36.97 right now for a barrel of West Texas Intermediate crude. So it is a mixed Monday. One of the big questions for investors surrounds the timing and size of a stimulus package. Neil Dudd is head of U.S. Economic Research at Renaissance Macro.
I do think fiscal stimulus is going to come one way or the other, but I think the market is right to think that if Vice President Biden wins the election, that'll probably bring up enough Democrats over the line in the Senate to get a more robust fiscal stimulus sometime early next year.
Twitter says it will flag tweets from certain accounts, including those of presidential candidates who claim an election victory before it's officially called. By 2 of 7 media outlets, it says tweets that include premature claims of victory will be labeled and will direct people to Twitter's official U.S. election page. As for Twitter shares, right now, Twitter is trading lower by 5.1%. This holiday season could be historic for 2 of the stock market's biggest names. We're talking about Apple and Amazon, with sales that are expected to surpass a milestone that has rarely been reached in Wall Street history. Apple and Amazon are expected to report revenue above $100 billion in the fourth quarter of this year. Right now, shares of Apple down 0.8%, shares of Amazon down by 2%. And that's the Bloomberg Business Flash.
Hey, here we are, Election Eve, just hours before polls officially open on the East Coast of the United States. Last day of campaigning for President Trump and former VP Joe Biden. 100 million early votes already forecast to be in. 1/3 of the Senate also being elected. Race has become tighter over the last few weeks. Man, it's just one headline after another. Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino, is back with us again from New Rochelle, New York. Jeannie, good to have you here. It is here, almost.
It's hard to believe. When you just said election eve, I thought she can't really. Wow, it is. And, I would just add another number that I read earlier today, which is $14 billion spent by federal candidates, committees, and outside groups, raised and spent this election cycle, breaking all records, obviously. But it's almost a mind-numbing number to imagine spent on an election.
Well, we always say it's not different this time around, yet it feels really different this time around. Is it? You understand elections, you see cycles. I mean, are there things that make it different this year?
Absolutely. Obviously, the pandemic, number one, and the amount of people that have engaged in early voting. We just talked last week. It was, I can't remember where we were at that point, 50 million or whatever it was. And now we are over 93, 94 million at the latest
This
count.
is 1/3 of Americans almost.
It is a stunning number. And I think, if it's any indication of what we see on Tuesday, we're going to see, record-breaking or near record-breaking, very high turnout. And it's astonishing. And I think one thing we don't do enough is give credit to the American public and also the poll workers who are out there making this happen, because there was a time several months ago when we thought maybe people simply wouldn't go out to vote or wouldn't engage because of COVID, and yet we've seen exactly the opposite.
Yeah, that's really fascinating. I agree with you, and I think we were concerned about a lot of times at polls, it's a lot of older individuals who were going to be nervous about being there because of COVID. So one thing I've got to ask you, I mean, you watch the polls, there are lots of them. I just kind of go through it every morning, and, we're reminded that last time around we got it wrong. Is there something different about the methodology this time around that can make us look at certain polls or polls in general as being more reliable this time around?
There are some differences. The number one difference is that we have a lot more polls in 2020 than we had in 2016, and particularly in the battleground states. and they are polling later. Like, we have seen polls over this weekend, still coming today, which are giving us indications about important states like Pennsylvania. But the sheer number of polls, and then the pollsters did try to learn from 2016 in areas where they may have missed, and things like trying to do a better job of voter turnout and reaching those voters who are actually going to engage. Of course, the pandemic has, thrown a monkey wrench into all of this. But we have seen a different tact, and we don't know yet if it's going to pay off, because there is still the question, are people being honest with pollsters? Are these numbers actually reflective of what we're going to see? But I think the one thing to keep in mind, the polls have been remarkably steady throughout all of these changes in this election cycle. And by and large, they have shown Joe Biden in the lead, although in some cases within a margin of error. And so that's where we are as we approach Election Day. But again, things can change at the last minute.
Well, what do you make, too, of, listen, we talked a lot, I know Bloomberg Businessweek magazine did a whole story on, like, the shy Trump voter, right, that people back in 2016 wouldn't come out and say we're going to vote for Donald Trump, and yet they did, privately, ultimately, when they went and pulled the lever. I was watching some coverage of people talking about shy Biden followers, whether you're in a very kind of normally red state like of Arizona, where you're afraid to kind of come out and say something. So I do wonder, are there a lot of, are we still in a situation where people maybe don't want to say who they are voting for?
I think so. I do think so. So we, this notion of a spiral of silence, where people feel that something is not, politically or socially acceptable in their circles, so they won't certainly admit it to a stranger who calls them on the phone for a poll. So whether that's, you're going to support Joe Biden and you're in a red state, or you're going to support Donald Trump and you're in a blue state, I do think we know that that is out there. The extent of it, I think, is a big question. We know the Trump team feels that there are a lot more of those people out there than, many researchers have been able to document. But some of this is just going to take after Election Day, comparing what are the actual results to what people were telling the pollsters. Everything at this point now becomes, guessing within a margin of error and a probability.
What do you think are going to be ultimately the key groups that maybe show up at the polls that haven't in the past? Is it minorities? Is it women? What is it? Or that, and have maybe shifted who they were supporting last time around?
I think women, white women, we're going to be looking at particularly in the suburbs. I think seniors, we're seeing a much more marked support among seniors for Joe Biden than Democrats have enjoyed in 2 decades. And I would also say I'm keenly interested in young people. They seem to have a lot of energy. Will they or won't they turn out? They usually don't turn out in as record numbers as, their counterparts. But I'm interested to see if they do. And then, of course, over the weekend, we're hearing concern amongst Democrats about African-American turnout in key states like Florida. So that's also going to be interesting. And, we talk a lot about shifts. Donald Trump shifting over some African-American men. They're estimating about 20%, which is not huge, but much better than Republicans normally do.
And what is, still the issue? Is it the economy? Is it virus? It was interesting, the coverage this weekend, and it was all maybe because of the spikes that we're seeing in cases once again in this country and just globally. Is it the virus? What are people voting on? Typically, it's, do you feel better? Do you have a job? Do you feel economically better? We've just got about 30 seconds, and then we'll come back and talk some more. But what is it?
I'm guessing it's going to be COVID, but I don't know for certain. That is the big question.
All right, we're going to come back. Jeannie, sit tight for a second. We're going to come back, continue talking about the election and the campaign, because there were some interesting things, too, that happened over the weekend in terms of both Joe Biden and both Donald Trump, big time out on the campaign trail. And I want to get into it with Jeannie in terms of what she saw and her thoughts on it. Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino. She's going to come back to us in just a moment. You are listening to Bloomberg Business Week. Quick check on the markets, and we know bouncing around a little bit, but we we are definitely kind of off our best levels of the session. So what does that mean? You've got the Dow Jones Industrial Average just up about 400 points, the S&P up 30, and the NASDAQ right now down about 18. All right, back to world and national news. Back to Nancy Lyons in our D.C. studio. Hey, Nance.
Hey, Carol. On this, the final day of the 2020 campaign, the odds of a so-called blue wave may be getting better. Bloomberg's Nathan Hager reports.
While many of the final polls before tomorrow's vote show a narrowing lead for Democrat Joe Biden, Real Clear Politics forecasting model gives the former vice president a record 90% chance of defeating President Trump with 350 electoral votes. The 538 model also predicts Democrats flip 5 out of 14 key Senate races, giving them a 51 to 49 seat majority over Republicans. And new projections from the Cook Political Report have Democrats expanding on their 35 seat majority in the House of Representatives with a net gain of 10 to 15 seats as Cook's likeliest outcome. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, President Trump has 5 rallies scheduled today and tonight in North Carolina, Pennsylvania, Wisconsin, and Michigan. Here he's speaking just outside of Scranton, Pennsylvania.
We win Pennsylvania, we win the whole deal. You know that, right? Just like last time. We want to have the same result as we had last time. Hello, Scranton. Hello, Pennsylvania. Thank you very much.
President Trump will end his re-election campaign late tonight in Grand Rapids, Michigan, as he did in 2016. On the Democratic side, former VP Joe Biden will end his campaign in Pennsylvania. Biden just spoke to workers in Beaver County.
I will be the most pro-union president you have ever seen. I guarantee you a seat at the table. God love you all, and thank you, thank you, thank you. Let's get this vote out.
Biden's campaign ends with a drive-in event in Pittsburgh with his wife, Jill, and Lady Gaga. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. Got to say, being with Lady Gaga could be a lot of fun. Sticking with the elections for just a moment, Twitter saying it's going to flag tweets from certain accounts, including those of presidential candidates who claim a U.S. election victory before it's called by 2 of 7 media outlets. So basically, Twitter saying it's not going to let candidates claim a victory for themselves. So something to keep in mind as we head into election day and election night. Twitter, big story. We talked about them last week, that big deluge of tech earnings. They posted their worst day since 2014 after their third quarter results showed fewer new users than analysts had projected. Well, Bloomberg's Emily Chang, she caught up with Twitter CFO Ned Siegel about how involved the company's CEO Jack Dorsey is in overseeing policies regarding questionable content. There's been lots of questions about Dorsey and being kind of the right person at the right time for the company. Listen up.
We have Jack and the rest of the company's appropriate attention on these really important issues. We think about setting really clear principles. We think about having policies that we can apply consistently and transparently all around the world, regardless of where we are and who it is who's tweeting them. And as we do that, we also need to be conscious that we have to be willing to adapt and learn in this very dynamic world in which we live. And so you mentioned the New York Post, and it's a great example where we realized that our policy against distributing hacked materials on the service needed to be updated. And so when we updated that, it then allowed that article to be shared more broadly than the rules would have allowed previously.
And again, that is Bloomberg's Emily Chang. She caught up with Twitter's CFO, Ned Siegel, talking about Jack Dorsey and overseeing questionable content and policies regarding that. You can see that entire interview on the Bloomberg and also at Bloomberg.com. But this is a big issue, as I mentioned, about Twitter saying it's not going to let the candidates claim victory themselves, but really policing some of the content that is certainly on that platform. It's been a big issue. It's something that policymakers are looking at, and really the world at large as they key in on social media. You are listening to Bloomberg Business Week on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ back on the plus side, green on the screen. The S&P, the Dow both higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are rebounding after last week's sell-off, with the Dow currently up 442 points. The S&P's gained 38. NASDAQ climbs by 16. The U.S. 10-year yield at 0.85%. Oil is up 3.3%. Gold gained 16. And small caps are up 1.7%. Among the main 11 S&P sectors, leaders to the upside, energy, materials, and industrials. Only consumer discretionary, telecom, and tech fell. Leaders to the upside in the Dow, Honeywell, Dow Inc., and Chevron, while Apple led to the downside. And after earnings, Clorox jumped 5%. The company says it still can't meet fully elevated demand. And wrapping things up, PayPal reports after the bell. Live from the First American News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Right now, 38-point gain for the S&P 500 index. That is an advance of just about 1.1%. To hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate it. Let's get back to Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino. We love talking with her. I love talking with her. She's on the phone from New Rochelle, New York. Can I just ask you, first of all, was it a little crazy, some of the stuff that was happening on the campaign trail this weekend?
I thought so. I was watching, and I think most worrisome to me was the disruption that occurred in terms of the Trump supporters disrupting the bus of that to me, and then the president seeming to support that. That's very troublesome, and I know you've probably seen. I've seen things boarded up in New York City and Washington D.C. That's a scary proposition because we may not have results on Tuesday night, and if that encourages people to respond in that manner, that's going to be really upsetting.
Well, so Jeannie, what do you make of the president come out and saying basically, we're going to have a decision. I'm going to declare the results of the election.
It's like so many things with Donald Trump, like nothing I've ever imagined hearing a president say. I can't imagine that he will do that. Chris Christie this weekend said he would not. But the president, as you mentioned, said he would. He's going to be at the White House apparently tomorrow, and he said whether the votes are counted or not fully, he will declare victory. I think it's going to depend an awful lot on the margin. If it's I think if it's a large margin that Biden has won by, I don't think it'll happen. If it's close, though, I think we're going to see them filing lawsuits, and I think we're going to see 2,000, on steroids in, a few states versus just one.
Well, and I do wonder, from what I understand, Florida, I think Arizona, North Carolina, those are some of the states where early voting has been happening for a long time, and they've already been counting for a couple of weeks. What are the key states that we need to kind of watch? Because you've been so smart in reminding us, it's why we don't look at the national polls. You've got to look at the individual states, right? It's 50 separate elections going on, essentially, and it all comes down to Electoral College and who gets the vote. So what are the states you're going to be watching really closely tomorrow night?
I think early tomorrow we should be watching Florida, Georgia, North Carolina. As you mentioned, Florida, for instance, has a long history with mail-in ballots. There, we expect that they will be releasing results early. And if Joe Biden wins one of those, that would portend a bad sign for the president. If the president holds out in all of those, and the big questions to me are Georgia and North Carolina, then this will shift to the Midwest, Pennsylvania, Wisconsin, Michigan. So I will be watching for those early Sun Belt states first, because if the president, now of course if the president exceeds expectations and does really well in those states, then he could, match what he did last time around. But we suspect it will be at least closer than it was last time.
What are the states that we've got to be really smart about, that they're only starting early voting counts, on election day, which we know physically is going to be probably impossible to count and get to all of them? Is it Ohio? Is it Pennsylvania?
The biggie to me is going to be Pennsylvania, because we know that, the sheer number that they are receiving and the way that they're going to be proceeding and when they start means we probably won't get results out of there on Tuesday night. And of course, they're receiving them for also North Carolina. So I think those states, North Carolina, we may know a bit earlier, but I think Pennsylvania is going to be the big one. And again, that's going to be critically important if everything comes down to those Midwestern states. And of course, Pennsylvania is the one that the president has the best shot of winning. Wisconsin, Michigan, the polls at least seem to suggest Biden has a much larger margin there.
What are you anticipating tomorrow night?
I'm anticipating probably one of those scenarios where the president holds some of those states and we do come down to a Pennsylvania. I would be stunned if Joe Biden won Florida, but if he does, it's going to be a very, very good night for Democrats. Florida has not been kind in the past, even the last gubernatorial race to Democrats. So I'm really curious to see from those early states that we get results out of, if Biden happens to take that one or a Georgia or certainly a Texas, this could change the map for many elections to come and also bodes very well for Joe Biden. But I suspect the president will do a bit better, and then we may come down to a Pennsylvania.
What does it say more broadly? I think about your teachings, Jeannie, in class, and that, we've been having conversations in my home that, it really is so close, despite you could have, depending on where you are in the country, it could feel like it's a very red country or a very blue country, but yet it really is very divided.
It's very divided. And I think, to me, from a broader perspective, I think if we go back to 2016 and you have somebody winning by 3 million votes and somebody else winning the popular vote by 3 million and somebody else getting the presidency by 77,000. I think that discrepancy, if we see, and I'm not sure, but if we see something broader than that this time around, I think we really do have to ask about whether we should have an electoral college, because, for 77,000 people's votes to count that much more than 3 million or more, that seems highly undemocratic to many people. And I think that only sort of frustrates this sense that we don't live in a fair, transparent democracy.
Yeah, I can't help but think if the forefathers were watching all of this and saying, you know what, guys, we created that system a long time ago. It's time to maybe do a little bit of a rethink, right?
Absolutely. I think that's a big thing. And I think, of course, we have to rethink polling, too, if we got this wrong.
Oh, man, such good stuff. I love your insight. Thank you so much. And I know you've been doing a lot for us, and you're going to continue through election and thereafter. Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino, on the phone from New Rochelle, New York. You're listening to Bloomberg Business Week. Coming up, we've got the chart of the day, and then, of course, we're going to count it down to the closing bell, I believe it's called, on this Monday. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening to Bloomberg Business Week. I'm Carol Masser. Coming up, we're going to check in with Dave Wilson. His chart of the day does have a little bit of an election twist, so we'll see what song he ties to that. We'll get to that in just a moment. Let's get back to your top business stories and another check on that trading day. Just under half an hour to go, Charlie.
Indeed, 28 minutes, in fact, to go ahead of the closing bell. The Dow, the S&P, NASDAQ all pushing higher. Investors, though, anxious ahead of tomorrow's presidential election. Treasury yields have dropped, the dollar touching a one-month high. After the worst week since March, prices fluctuated as dip buyers sought to revive an earlier rally. Here's where we stand. The S&P 500 index is up now by 38 points, a gain of 1.2%. The Dow's up 452. That is a gain of 1.7%. NASDAQ is up 19, up by 0.2%. 10 years up 6/32, 10-year yield 0.85%. Gold up 0.9%, higher by $16 the ounce at $18.94. And West Texas Intermediate crude up 3.5%. 37.03 right now for a barrel of West Texas Intermediate crude. Right now, we have got mega cap tech shares such as Apple and Amazon. They have paired their losses, but they are both trading lower. Amazon down now by 1.5%. Apple is lower by 0.6%. A coronavirus vaccine under development from Germany's CureVac showed a good immune response in early trials, validating the biotech company's 20 years of research into messenger RNA's ability to train the body's defenses. Shares of CureVac right now, they are trading a little changed, actually down 3.6%, down $1.78. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Television this morning, she talked about the race for a vaccine.
I think the vaccine is absolutely the number one priority right now, but I also think that we'll learn a lot more in the next year or so about the virus, because we'll see the seasonality of it, we'll see how people become reinfected, or if they become reinfected regularly, and how their immunity wanes, and that'll tell us a lot about how we're going to manage this virus moving forward.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Citigroup says it will serve as financial advisor to an initiative that is seeking to develop, manufacture, and distribute COVID-19 vaccines globally. The bank said it was selected by Gavi, which is the Vaccine Alliance. Citigroup shares, they are trading higher. Citigroup up now by 2.4%. Recapping, stocks are advancing. S&P up 35, up 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. All right. Dave. Wait. Play it up a little bit, everybody. I don't know, Dave Wilson. I don't even know what to search on for this to do my Google cheat.
Police and Thieves.
Police and Thieves.
Yeah.
Who is?
Originally done by a reggae artist named Junior Mervin. And covered by The Clash.
Oh, wow. God. Of course I wasn't going to get that.
Well, you know, it's all about the guns and ammunition line.
Yeah.
That's what
Yeah.
sort of tied in for me, at least given today's chart.
Did you know that song right away when you were doing the chart? You're like, okay, I'm going to go to this. Or did you have to do a little research?
It popped into my head when I was trying to tell our producer, Paul Brennan, what I was going to pick. So, you know.
Did Paul do one of those like, what?
No, actually not. I don't know that he was familiar with it. But then again, you know, The Clash certainly had their day in the late
Rock
70s,
the Casbah?
early 80s.
Rock the Casbah?
Yeah, that was their big hit. Absolutely.
Yeah.
One of them anyway.
Yeah.
Should I Stay or Should I Go was another one.
Also really good. I remember dancing to that one. All right, so it has to do with guns. I said everybody, we teased it earlier that it has an election theme. So what do you got for us in the chart?
Well, that's it. I mean, think about what's happened this year, and, you know, it hasn't been police and thieves necessarily. It's been more like police and protesters. when you think about what's happened in major cities, with the deaths of blacks at the hands of police and all the protests there, and the police response to that, and out of that, we've seen the makers of guns and ammunition have quite a year in the stock market. Look at Smith & Wesson brands. The shares have more than doubled. At least they had through Friday. The company was also in outdoor equipment, spun off that business in August. Then you have Vista Outdoor, which supplies ammo along with, sort of outdoor gear. Its shares had also more than doubled through Friday. Similar story at Sturm Ruger, another gun maker, up 42% through Friday. And bear in mind that over this period, the Russell 2000 index that they're all a part of, fell for the year. So it really shows you it's an outsized performance. And what particularly got my attention, Sturm Ruger had earnings out last week, and in the statement that accompanied the results, their CEO, Christopher Kilroy, talked about, how the demand for the company's weapons was fueled by civil unrest and calls to defund the police, among other things, mostly related to the coronavirus. But anyway, it just goes to show you that this sort of law and order issue that's come up during the election has had a definite effect on the performance of these companies. Now, we should note that they're all trailing the Russell 2000 since President Trump was elected in November 2016, so it's a very different situation if you look back 4 years. You could argue they're playing a little bit of catch-up, but what you can argue is that this year's performance is really outsized. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave, I was just watching a piece over the weekend, and it was about women specifically buying guns, and they're just saying that a lot of it has to do with nervousness about some of the unrest that we've seen around the country, hitting major cities, and it was a national thing, and that there are a lot of women out there increasingly buying guns. But I love watching the gun companies because, often when there's concerns about a shift in politics or a shift in maybe who's in charge, that when there's concerns of maybe a Republican being either out of a position, that people run out to buy guns ahead of maybe some policy changes.
Right, just concerned that the restrictions on gun ownership maybe ratcheted it up, in terms of waiting periods or all the rest, and it certainly has its effect from time to time. And this year, you can see how the unrest that has been happening has had an effect on the gun industry and the ammunition industry as well.
Yeah, good stuff. Did you tell everybody where they can find the chart?
Yes.
Oh, you did. Sorry, I am listening. I'm just.
It's okay.
I was thinking of you over the weekend. I was listening to satellite radio, and there was the Springsteen channel, and I was thinking of you.
Street Radio, absolutely.
Pretty good stuff.
With that new album, Letter to You. A lot of interest in Bruce.
All right, we'll see you in a little bit, Dave. Thanks so much. All right, let's get back to world and national news. Back over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The candidates are on a final whirlwind tour of several battleground states as the 2020 campaign winds to a close. Both are spending time in Pennsylvania. President Trump speaking in Scranton, Joe Biden in Beaver County.
4 years ago, I came and I was a successful guy, and I said, we're going to do this. We're going to cut your taxes. We're going to get rid of regulations. We're going to rebuild your military. We're going to this and that and that and that. And I did everything and more than everything.
We choose hope over fear. We choose unity over division. We choose science over fiction. And yeah, we choose truth over lies.
Trump will wrap up in Grand Rapids, Michigan, like he did in 2016. Biden will finish in Pittsburgh with Lady Gaga. Federal and state officials have put in place what they say are formidable barriers to stop cyber attacks ahead of Election Day.
Cybersecurity experts have been brought together to form an all-of-government effort to ensure voters decide who the next president will be without U.S. adversaries sabotaging the process. Dozens of state, local, federal, and private players will be linked to the Department of Homeland Security's command center on election night. Congress has distributed nearly $1 billion to states to protect voting systems and procure paper trails that can can be audited for each vote. In Washington, I'm Amy Morris, Bloomberg Radio.
This just coming in, a federal judge is rejecting efforts by GOP activists to invalidate nearly 127,000 drive-in votes in Houston. And another federal judge is ordering the U.S. Postal Service to use express mail and make every effort to deliver mail-in ballots in 3 crucial swing states by Election Day. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Those court decisions really coming down to the wire here and certainly important to that election outcome. Hey, one thing that caught my attention has to do with one of the, most hard-hit industries because of COVID-19, the airline industry. A story about hundreds of thousands of Britons barred from flying during the second lockdown are to be denied refunds by some of Europe's biggest airlines. We're talking about British Airways, Ryanair, Wizz Air. They're not going to get those customers their money back because of a couple of different reasons. And, obviously this is coming down to another wave of COVID. What I want to bring to you is Ryanair, because their CEO, Michael O'Leary, caught up with Bloomberg TV earlier today and talked about the impact new European lockdowns could have on that discount airline carrier. Listen up.
Near term, Madison, we've reduced our winter schedule to just 40% of prior year. We are kind of guiding for about 38 million passengers for the full year up to the end of March. We think we may have to work that number back slightly. We're running pretty much skeleton schedules for the next month or two. Forward bookings into November were already terrible, so we're not sure these lockdowns will have that much effect on it, although the risk would be to the downside. But they're a continuation of, the failed policies of EU governments for the last 12 months. The WHO themselves have said that lockdowns, are a failure. They should be avoided wherever possible. And they're only useful if you use the time of the lockdown to get your testing system in place, your test and tracing system in place to avoid the second lockdown. And here we have the UK government, the Irish government locking us down again. But if there was a month to be locked down, the month of November would be the best month.
And that, of course, was Ryanair CEO Michael O'Leary catching up with our Bloomberg TV team earlier. That entire interview on Bloomberg, I should say, and also at Bloomberg.com, so you can check it out. Michael O'Leary also went on to say, if a flight is operating, then no, we will not be offering refunds, which goes to what I was saying earlier, that basically the guidance that's going on because of COVID is preventing a lot of passengers from maybe taking a flight, but it doesn't mean that necessarily the airlines are canceling those flights. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. NASDAQ back in the red. It's been a volatile session. NASDAQ down 10 points now, a drop of 0.1%. The NASDAQ 100 index, by comparison, down 0.3%. S&P up 26, up 0.8. The Dow's up 339, up 1.3% at the best level of the session. The Dow had been up by about 2%. Stocks are pushing higher as investors remain anxious ahead of tomorrow's presidential election. Treasury yields dropped, the dollar touching a one-month high after the worst week since March. Prices fluctuated as dip buyers sought to revive an earlier rally. Again, we've got stocks trading mixed. The 10-year up 5/32, 10-year yield 0.85%. Gold up 0.9%, 18.95 the ounce. And West Texas Intermediate crude up 3.6%, 37.09 for a barrel of West Texas.
I'm placing a stop on profit for euro at the price 116.36. Okay.
Drive on. Excuse me, I want to drive. Just drive, baby. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Back with us is David Dietz, President and Chief Investment Officer at Point View Wealth Management. $7.3 billion in assets under management. David is with us once again on the phone from Summit, New Jersey. David, nice to have you back with us. This is a jam-packed week, man. Between the election, between the Fed, between the jobs report, there's just so much going on. We're still getting through earnings. How do you make sense of it? And I'm curious, are you finding more new money come in, or what are some of the interesting trends that are happening right now?
Yeah, absolutely. So we've really got a trifecta of issues that are confronting us. That would be the election, that would be the vaccine, that would be stimulus. And what I've been telling investors really is just a matter of time here before we're going to get some resolution. Hopefully we know more, at least by the end of the week, as to how the elections works out. Investors, I think what they want now is just kind of a clear signal as to what's going to happen. It's the uncertainty. I think investors have gotten comfortable that no matter who wins, their marching orders is going to be clear. Get the vaccine going, get the stimulus going, get this economy going again. So I think they're comfortable there. In terms of the stimulus, I don't know whether we're going to get anything in the lame duck session here, but we'll definitely have something before the end of January. In terms of what clients and investors are doing right now, I think they're basically just staying put here. Obviously, October was a rugged month. On the other hand, the smaller guys, the smaller fries, the Russell 2000, they were up about 2% in the month. So obviously, it's a mixed market, and we're seeing some rotation to some of the areas of the market that have been left behind, Carol.
Well, that's exactly how we kicked it off on this Monday. We were talking with our Gina Martin-Adams, and she just talked about market rotation and, said specifically it's really an earnings thing, that tech was the big story back in the second quarter, and rightfully so. Those valuations were justified because they were producing earnings. But now we are seeing, a change in terms of thought, and that we're seeing market rotation. She thinks that tech will undershoot earnings growth for much of 2021. Do you agree with that, and that this market rotation might stay with us for some time? Or if we get more stimulus, then that could change things?
Bottom line is stay diversified.
But everybody says that all the time, David.
Calling the timing of a rotation is always difficult. But what we have seen here is that although by and large, other than perhaps for Twitter, the mega cap tech results were stellar. The problem is they're up anywhere from 37 to 74% year to date, and so the valuations were too stretched. It wasn't that they weren't meeting expectations; they weren't meeting the whisper numbers. So that tells me you have to be cautious in that area. area. But what I am saying here is generally dividend-paying stocks hold their own, if not outperform. But starting in February, when we start to get the COVID coming in, the 80 highest dividend-paying stocks of the S&P 500 are down 26%. While the S&P is flat, pulled up by those mega cap techs. Now, what can I tell you from that? That disparity is not going to happen in the next 9 months. So the question is, do the dividend payers start moving up or the mega tech start moving down? It's probably a little bit of both, and that's where these dividend-paying stocks, I see a lot of opportunity, particularly as you pointed out earlier, the Federal Reserve is really going to be on hold for a long period of time.
It's such a great old kind of play, right, when it comes to dividends. But, I mean, when you look at some of these companies, and I guess it explains why you like a name like Coca-Cola or maybe a name like Chevron.
Yeah, so let's talk about Coca-Cola. Coca-Cola, in terms of beverages and volume, is 3 times the size of its next largest competitor in that non-alcoholic space. That gives you so many scale benefits. Now, normally you can't get a company like this, which has the dividend close to 4%, and here you have it. It's down 25% from its 52-week high. So why is that? It's because, guess what? We pay less for Coke when we drink it at home as opposed to when we go out to the ballpark or to the restaurant and buy it. And I think at some point, maybe a year from now, could take a while, we will be back to normal. And of course, you're going to get that 25% pickup in the stock price of Coke as it goes back up. And meanwhile, you're collecting that 3% plus dividend. That seems to me a low risk way to stay in there relative to when you have a 80 basis points on the 10-year Treasury.
All right, Chevron, talk about a dividend. I mean, that's a killer. We're talking about over 7%.
Yeah, it's 7.3%. And what I also like about Chevron is it's a member of the exclusive dividend aristocrats club. What does that mean, Carol? That means it is not only paid the dividend, but increased it for 25 years in a row. That shows to me the commitment to make sure you're returning the profits to the shareholders. Now, certainly energy has been under pressure. We're paying the lowest prices at the pump now as we have in 12 years.
Right.
But with the amount of deficit spending, with the economy potentially on the rebound, my guess is energy prices go up from here. Chevron, conservative balance sheet, one of the largest in the world, is well poised to take advantage of that.
I mean, the stock's down 40%, so you've got to really, I mean, I understand the dividend, but you really do lose a lot in terms of the share price.
No question about it. People who bought it a year ago are hurting. Right. I'm talking about getting involved now. And, of course, to regain that 40% with the way the math works, that's almost a double. Look, if that takes 6 years plus collecting your 7%, I think you're going to do better than most people in the marketplace.
So one more name I just want to ask you about, Aflac, the insurance guys. What is it? What's the thinking there? Same thing?
Well, so Aflac is in that beaten down insurance group, but the beauty of an insurance company is that they don't have that tricky loan portfolio that they have to wonder whether the loans are going to be repaid. Here's a company, again, who's increased that dividend for 37 years in a row. Right. Normally that dividend has a one handle. Now it's over 3%, but they're only paying a quarter of their earnings out for dividends, so they have room to continue to increase it. In fact, that dividend's going up 8% per year for the last 5 to 10 years. It's a supplemental insurance program. As we know, everything's focused on COVID. People are cautious about spending on anything that's not an actual essential, but I do believe that people will come back to continuing to expand the Aflac program. They're big in Japan. The U.S. dollar's been weakening. That helps them. And, of course, they have a huge stock buyback program, 121 million shares they want to buy back as soon as they can.
All right, going to leave it on that note. David, thank you so much. David Dietz, President and Chief Investment Officer over at Point View Wealth Management, $7.3 billion in assets under management, and liking a common theme, the dividends, Coca-Cola, Chevron, and Aflac. All right, we've just got a few minutes left in today's trading session. Bouncing around, we're off our lows, but also off our highs, but we're seeing green across the screen when it comes to those major equity averages. Stick around. We've got the close in just a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange on this first trading day of the new month. Folks from Cohen and Steers, by the way, virtually ringing that closing bell as we await the latest numbers out of Cirrus Logic, Rambus, Arista Networks, PayPal, and Trivago Networks. Turned out to be an up day for the S&P 500 index, NASDAQ, and the Dow Jones Industrial Average. NASDAQ had been swinging between gains and losses, but ended the session with a 46-point gain today, up by 0.4%. The NASDAQ 100 index up by 0.3%. S&P at the close up 40, an advance of 1.2%. The Dow up 422 points, up 1.6%. At the best level of the day, the Dow Jones Industrial Average have been up by 541 points. And this headline to pass along from the Bloomberg Professional Service in the security industry. G4S said to be rejecting a takeover proposal from Allied University. Stocks pushed higher with investors anxious ahead of tomorrow's presidential election. David Dietz is the president and chief investment strategist at Point View Wealth Management. He was our guest moments ago right here on Bloomberg Business Week.
Investors, I think what they want now is just kind of a clear signal as to what's going to happen. It's an uncertainty. I think investors have gotten comfortable that no matter who wins, their marching orders is going to be clear. You know, get the vaccine going, get the stimulus going, get this economy going again. So I think they're comfortable there.
Again, S&P up by 40 points today, up 1.2%. 10-year up 6/32. 10-year yield 0.85%. Gold up 0.9%. 18.95 the ounce. West Texas Intermediate crude up 3.5%. 37.04 a barrel. Dunkin' Brands Group shares rallied today after agreeing to be acquired by private equity-backed Inspire Brands in an $11.3 billion deal, one of the largest transactions ever in the restaurant industry. Shares of Dunkin' up today by 6.5%. Recapping S&P up 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, time to do some moving and shaking on this Monday. Carol Masser here on Bloomberg Radio. We're going to have joining us in just a moment. Actually, she's with us. Bloomberg News cross asset reporter. Slow down. Bloomberg News cross-asset reporter Sarah Ponzak. She's joining us, I think, is she back at our studio?
I am back in the studio.
You are at our Bloomberg Interactive Brokers studio. Man, what a weird day. I mean, it's funny because we were bouncing around here. I'm looking just kind of some big picture stuff, Sarah. You know, S&P 500, most names up, 445, 58 lower, 2 unchanged. But if you look at those major industry groups, everything is up across the board. But it's kind of a surprise again to see energy at the top here.
It was a bit of a weird day. There's no doubt about that. Earlier in the day, we had seen some relatively light volumes. By the end of the day, though, if you look at volumes in the S&P compared to the average over the past 30 days, about 18% higher. So we even did see volume pick up into the end of the day, especially with markets coming off, I should say, their lows of the session, although markets were higher, other than the NASDAQ. At one point, the NASDAQ did turn red. We saw a pretty steep pairing of the gains earlier. The NASDAQ still closing up 0.4%, though, but still a continuation of the underperformance of technology that we have really seen over the past weeks, over the past month. If you look over the last month, tech is your worst performing sector. Well, today it was among the bottom of the pack if you look at the 11 S&P 500 sectors, but energy, materials, industrials, you are getting that cyclical, that value read through on the day. And granted, I will say, though, that energy did rally alongside oil. Earlier, we had seen a sell-off across the oil market, the lowest since May. We saw WTI crude oil prices the lowest in 5 months. But after Russia said that they may be holding off on some production, we did see that rally come back, oil ending up 3.5%.
Well, listen, it's pretty remarkable. We just had David Dietz on talking about some of the energy names. He likes Chevron. I mean, he's doing it, you know, in part because it's a great dividend play. ExxonMobil, they've got a more than 10% dividend yield, you know, so that even though the name is down 51%, like if you're an investor, you're going to like that dividend play, and that at some point, Gina Martin Adams was talking at the top of our broadcast, Sarah, that we're seeing market rotation and that, the technology names have gotten expensive and earnings, they were really the story in the second quarter, and maybe it's going to be a little bit different right now going forward.
Right. It's certainly true. First of all, when you look at where bond yields are, you look at a 10-year at 85 basis points. Granted, we have seen real yields rising a little bit, but still at negative 86 basis points. People are looking for yield, and if you have a nice dividend yield on a stock, we might see investors gravitate towards that, especially if you look at the energy sector. Right now, energy is the worst performing sector on the year, still down 50%. So it is your true value play. And something that Gina Martin Adams over at Bloomberg Intelligence has pointed out is the fact that moving into 2021, yes, technology companies are still expected to post positive earnings growth, but the reality is, when you look at the comps from this year, they are not expected to see more growth than the other sectors, particularly your cyclical sectors. So the argument is that, granted, we'll still see positive earnings growth for tech, but that growth isn't going to be as strong on a relative basis as it has been. And if you see that leadership change from a earnings growth perspective, well, does that mean that tech still really should hold on to that market leadership perspective?
Yeah, I think it's an interesting debate, and we'll have to see how it plays out. I still think we are a tech-dominated economy, and increasingly so, that's the case. And I think it's going to continue to shift that way, from continuing to go away from those old economy companies to those new economies, but we're going to have dips at some times.
Right. There's no doubt about that, especially when you think of where COVID-19 has put it. We've heard it that it's accelerated these digitized trends, but when you think about the companies that people are using every day, heading into the holidays, how often are you going to hear about Apple or Amazon, people ordering things off of Amazon? There's no doubt that this is just the way that the economy is gravitating towards. And I'll even point out, I'll bring in some of the economic data from this morning. We got unbelievable ISM manufacturing data, the highest in 2 years. However, when you think about where this recession has really been focused, it hasn't been on the manufacturing side, it's been on the services side, and tech has been excluded too.
Exactly. We've got a household, we're getting ready for 3 new phones. I mean, I can't wait to see the following quarter for Apple and see how it plays out. Sarah, you're the best. Bloomberg News cross-asset reporter Sarah Ponzak running through the markets on this Monday. You are listening to Bloomberg Business Week, and this is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson. Open up the door, it's Dave. Who? Dave. Hey, Mr. Wilson!
Hey, Mr. Wilson, let's get to your stock of the day. Ticker is CVA, and I did not think that you would be talking Covanta and Sam Zell, but it makes sense.
Absolutely. I mean, Covanta Holding collects trash and operates waste-to-energy plants to produce electricity. The company began in 1983. It was bought out of bankruptcy in 2004 by a company led by billionaire Sam Zell, who's been chairman since 2005. Now, Covanta's ticker is CVA, as you mentioned, Carol. The company's shares set a record in 2008 and lost about half their value within months. This year, the stock fell as much as 56% to set a 15-year low in April. Covanta recouped much of the loss in the past 2 trading days. On Friday, the stock climbed more than 19% after CEO Stephen Jones was replaced by a director, Michael Ranger. The company also began a review of operations. Those moves led Barclays to raise its rating on Covanta, the equivalent of buy from hold today. Also, Oppenheimer lifted its 12-month share price estimate by $1 to $13. That's the highest projection of 7 analysts in a Bloomberg survey. Covanta rose another 15% in response to the calls. That brought the stock's 2-day gain to 37%, and that's the biggest since 2005.
Still down 30% for the year. Wah, wah, wah. Just saying.
Yeah, well, now you know why they're doing this review. And, I mean, Sam Zell clearly is part of this process. So, we'll see how it all works out for him and for the rest of the company's shareholders. Yeah, you always want to watch, certainly when Sam Zell is involved in stuff. All right, Dave Wilson, thank you so much. Really appreciate it. Dave Wilson, Bloomberg Stocks editor, with his stock of the day, Covanta Holdings.
and that ticker is CVA. And as Dave said, it's been on quite a run over the last couple of days, really rallying Friday and again today. All right, let's get back to world and national news. Over to Ed Baxter out in San Francisco. How are you, Ed?
Hey, I'm doing great, Carol. Thank you. And you sound great, so I don't have to ask. Second Republican Party attempt to get drive-by voting thrown out in Texas has failed. Federal Court Judge Andrew Hammond said, for lack of a nicer way of saying it, I ain't buying it. Now, Texas is tight. Major focus as well in Pennsylvania, and Bloomberg's Kevin Cirilli says the latest polling shows things are definitely tightening.
This new NBC Marist poll shows that the president is closing the gap with Joe Biden in Arizona as well as Pennsylvania, striking well within the poll's margin of error. He has now brought that to below 5 percentage points.
Candidates, Democrats have focused on Pennsylvania. Joe Biden there yesterday, Kamala Harris today.
Pennsylvania will determine who will be the next president of the United States.
And Mike Pence.
The great American comeback is on.
Yeah, meanwhile, Joe Biden has picked up on Mr. Trump saying that he may fire Dr. Anthony Fauci after the election, saying he will listen and appoint Dr. Fauci. And beyond that,
Tomorrow we have an opportunity to put an end to a presidency that's divided this nation. Tomorrow we can put an end to a president that has failed to protect this nation. And tomorrow we can put an end to a president that has fanned the flames of hate all across this country.
And Mr. Trump is focusing on the polls.
The Fox polls are horrible. Every time I have a Fox poll, it's horrible. I mean, I like some of the things on Fox, certainly Sean and Laura.
And the U.S. finally is going to make it, we hope, one day to go to Election Day, as reported cases of COVID-19 hit a new national high and hospitalization rise in 44 states. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed Baxter, thank you so much. Yes, those numbers pretty troubling. Someone who definitely takes a big look at the world, a broad look, is Bridgewater Associates founder Ray Dalio. He caught up with Bloomberg's David Inglis for an exclusive interview from the Hong Kong FinTech Week event that happened earlier today, and talked to him about a bunch of things. But in this little excerpt, Ray Dalio talking about why he favors investing in China over the United States. Check it out.
When I look at China and the opening up of the markets, I do know that I have to have a significant portion of my portfolio there, just like I have to have a significant portion in the United States and so on. But the interest rate differentials are favorable. The growth rate differentials are favorable. A big element is going to be order, internal order. So far, that's pretty favorable. So when I look at it, it's that element of diversification and then make the comparison. I'd much rather own, for example, Chinese bonds than to own U.S. bonds. The currency, I think you're going to have favorable capital flows as they open up. So for those reasons, tactically as well as diversification-wise, I would do that. But it's not just in China and the United States. There's a whole world out there. In the Asia-Pacific region.
And that was Bridgewater Associates founder Ray Dalio speaking with Bloomberg's David Inglis for an exclusive interview. They caught up at the Hong Kong FinTech Week event earlier today. Catch that entire interview on the Bloomberg and, of course, at Bloomberg.com. Listen, Ray Dalio is someone that we always listen to. He does look at some of the deeper problems and issues in the investment world and more broadly just impacting our world. Of course, over at Bridgewater Associates, he's certainly found some challenging investment environments, but fascinating to see what he has to say about kind of our changing world and why he said in a world where Chinese investors have bought a lot of U.S. debt, why Chinese debt might be a better alternative or interesting one at least. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the companies out with earnings after the bell, Rambus reporting a third quarter loss of 11 cents a share. Third quarter revenue coming in at $56.9 million. Couple of other key headlines. Rambus announcing a new stock buyback program. It'll buy back 20 million shares. Also, Rambus and Micron have extended their patent license agreement. It was an update on Wall Street today. We had the Dow, the S&P, and NASDAQ all rebounding from the worst week since March as investors bet on the energy, materials, and industrial sectors ahead of tomorrow's presidential election. Crude up the most in more than 3 weeks. Today we saw West Texas Intermediate crude up by 3.2% of $1.16 a barrel, $36.95 on WTI. Gold was up 0.9%, $18.95 the ounce. The 10-year up 8/30 seconds, 10-year yield 0.84%. Dow Transport's up today by 1%. The Dow rallied 423 points, up 1.6% at the best level. The Dow has been up 541, up by 2%. S&P ended the session with a gain of 1.2%, up 40 points. Again, best level there. Have been up 1.8% on the S&P. NASDAQ up 46, spent much of the day swinging between gains and losses. NASDAQ up today by 0.4%. So again, recapping in advance for the U.S. stock market, the Dow, the S&P, and NASDAQ all higher. S&P up 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So here we are on Election Day Eve, and I think one of the things we're thinking about that may or may not change depending on the outcome is the U.S.'s relationship with China. In the meantime, China is definitely moving ahead, plotting its future. We got a window into that last week. In his weekly column, Bloomberg New Economy editorial director Andy Brown writes about that plan and really what is China's end game and what it truly means. Andy joins us on the phone from New York City. Andy, good to have you here. You know, we've talked about, first of all, just kind of set the scene, China's latest 5-year plan. I mean, this is where they kind of laid out what they're going to do for their economy, right?
China is still, surprising though it may sound, very much a planned economy. These 5-year plans date back to the sort of Stalinist era, and they set out the government priority for spending and investment over the next 5 years. And the big, I guess the big takeaway from the latest 5-year plan is that China is turning inward. It's going to be looking much more than it has before to domestic consumption as a driver of growth. And particularly when it comes to technology, the stress is going to be on self-reliance. The term in Chinese is 自力更生, which is a Mao-era term. And it doesn't imply autarky. It doesn't mean that China is going to seal itself off from the world. But what it means is that China is going to be relying much more on indigenous, homegrown technology because it really feels that it has been made very vulnerable by the trade war and the U.S. technology embargo.
Well, it's interesting, too, and you highlight this in your column, Andy, you know, that China wrote about in that plan hostile foreign forces, which feels kind of off-putting, right, to the rest of the world. But they aren't going to be cutting themselves off completely from the rest of the world. They really can't, can they?
They can't, but they can feel threatened. And I mean, this has really been this is a sort of been a mindset of the Chinese Communist Party since the beginning. Don't forget, this movement was born in war. I mean, the communists were almost annihilated in the early years when they were in civil war against the nationalists, which is where this term self-reliance comes from. Standing on your own 2 feet, being strong, being independent, not being pushed around. That's the message, really, that's coming out of this 5-year plan.
You know, and it's interesting, Andy, as we've seen so many countries kind of look inward. We certainly have seen that in the U.S. under the current administration. At the same time, China, while they're very much focusing on their domestic economy, they're welcoming, you know, global business. I'm still kind of floored by Tesla setting up that factory and seemingly doing it so quickly.
Yeah, this is actually not such a bad thing for global businesses. I mean, this doesn't mean self-reliance does not necessarily mean self-sufficiency. China still needs foreign technology. Hence, yes, you mentioned Tesla. It's allowed Tesla to build a gigafactory in Shanghai. And at the same time, it's throwing open the doors to U.S. asset managers. Why? Because it needs to have a much more innovative financial system that does a better job of growing the savings of the country, and it needs American know-how.
So what does it mean then, the kind of China that we're going to see, I don't know, over the next 5 years, and especially, whether or not that changes if we get a new administration here in the United States? It's just, again, a China continuing to focus on its domestic economy, but again, bringing in whoever they need to help develop it.
I think it means that they're digging in for the long haul. They expect to be facing a hostile United States and an increasingly hostile world for the foreseeable future. Actually, they don't think that Joe Biden would make much difference. In fact, if anything, they worry that Joe Biden would be much more effective in pulling together an anti-China coalition than Donald Trump has been. So they're not at all comforted by the idea of a blue wave or a Joe Biden victory.
So what does it mean also then, I think, Andy, just to kind of wrap up, and tie it up in terms of global industries, and I think about our banks, as you said, China's definitely welcoming the global and really U.S. financial community, and they want to be there too, right? But how does it make it kind of tricky, especially if you've got an administration, again, that's going to be kind of pushing back constantly on China?
Well, we talked about this before. Global businesses are very much caught in the middle. But if China really is serious about growing its domestic economy, about transferring wealth to the Chinese consumer, U.S. businesses are going to have to be there. These are some of the biggest markets in the world, and China is the only major economy now that is still growing.
Right, and it's something we've seen for decades, right? The U.S. companies, the big multinationals, the global multinationals wanting to be there, certainly, and be a part of that Chinese market. Andy, thank you so much. Really appreciate it. Bloomberg New Economy editorial director Andy Brown on his weekly column. You can find out more. Just go to Bloomberg.com, and, of course, always on the Bloomberg terminal. All right, you're listening to Bloomberg Business Week. Coming up, we've got a couple of really nice deep dives that we're going to continue to do on our broadcast, including one of my favorite industries to talk about, and that is real estate. I feel like there's headlines constantly every day talking about areas of the market that are gaining and others that are losing ground. So we'll do that as well. Really see if people are moving out to the burbs, as we've been talking about. Poppy McDonald's is also going to be back with us, head of USA Facts. So we'll talk about that in terms of how it fits into the election. And then we're going to wrap up with a little bit of, I want to say lighter fare, but it's actually about a pretty serious subject. You're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser here at Bloomberg Radio. Coming up, we're going to talk about real estate. A couple of headlines I want to bring to your attention. We'll get to that in just a moment. And then we'll check in with the founding partner and president of Bespoke Real Estate, Cody Vichinsky. We'll get to him in just a moment. First up, though, back to your top business stories, some of the news after the closing bell. We had some earnings, right, Charlie?
We certainly did. PayPal, let me get right to that. Shares lower now by 2.8%. PayPal, though, PayPal Holdings boosted its annual profit forecast after it continued adding new accounts at a near-record pace in the third quarter, helped by a number of people signing up, seeing a boom in online shopping. After all, we're under lockdown. A lot of people ordering from home, that to PayPal's benefit. But again, shares moving lower now, down by about 2.8%. Turned out to be an update on Wall Street here. Stocks did rebound from the worst week since March as investors bet on the energy, materials, and industrial sectors ahead of tomorrow's presidential election. Crude oil up the most in more than 3 weeks. Let's begin with crude. West Texas Intermediate up 3.3%, $36.98 a barrel, up $1.19 a barrel today. Gold was up 0.9%, up $16.77 the ounce at $18.95. The 10-year up 8/32, 10-year yield 0.84%. Equities higher across the board. NASDAQ up 46 points, spent a lot of the day swinging between gains and losses, but ended the session up by 0.4%. S&P up 40, a gain there of 1.2%. The Dow Jones Industrial Average up 423 points, up by 1.6%. So an update on Wall Street today. Investors certainly keeping an eye on the election and what it may mean for stimulus. But Margie Patel, Senior Portfolio Manager at Wells Fargo Asset Management, says she's watching the Federal Reserve.
I don't think this so-called stimulus is actually stimulating the economy. I think what's much more important is the Fed policy of keeping rates near zero, promising the financial markets that they will provide whatever liquidity is necessary to avoid a steep correction in the financial markets. That's much more important because every recession we've ever had has been precipitated by the Fed slamming on the brakes, taking out liquidity. They've guaranteed us that they aren't going to do that.
Norwegian Cruise Line Holdings has announced an extension of its previously announced suspension of global cruise voyages to include all sailings embarking between December 1st through December 31st this year for its 3 cruise brands. They are Norwegian Cruise Line, Oceania Cruises, and Regent 7 Seas Cruises. Shares of Norwegian today did decline. We saw Norwegian down 2.8%. Among some of the rivals in the industry, Carnival was down 1.2%. Royal Caribbean, though, had an up day up by 1.1%. Recapping, S&P up 40, a gain of 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Still really tricky for the cruise industry. All right, Charlie, thank you so much. Also tricky for the real estate industry. We had some headlines today that caught my attention. America's ailing malls suffering a pair of body blows over the weekend. 2 major landlords followed their ever-growing list of bankrupt tenants into Chapter 11. We're talking about Pennsylvania Real Estate Trust and also CBL and Associates Properties, each seeking protection from creditors. That happened yesterday. And of course, we continue to talk about the flight from New York City to the suburbs and to elsewhere. Let's get a look at the real estate property market. Cody Vichinsky is founding partner and president of Bespoke Real Estate, joining us on the phone on this Monday. Cody, nice to have you here with us. So let's start kind of big picture. First of all, how are you? What's your world been like in the last 8 months?
Thanks for having me, Carol. My world has been frenetic, filled with good blessing, filled with a lot of interesting conversation. So we are based primarily in the Hamptons, and we work in markets such as New York City and South Florida, and we are advisors to a lot of these, what I would call sub-markets, secondary markets all over the country. So as you were alluding to, many of them have benefited and seen an exodus out of urban areas like they've never seen before. So for several people in the industry, the residential industry, it's been a gangbusters year. So we are on the tail end of summer season, heading into more of a primary season.
Well, talk to me about those secondary markets. It's interesting that you say that. I hosted a panel for Milken this year, a virtual panel, obviously, but it was global real estate. So it was someone in the UK, folks in the US, someone in China, and just what was going on. And we talked a lot about the secondary and tertiary markets and that how we're continuing to see a trend that was already happening, but we saw it pick up a lot of momentum because of COVID-19. What are you seeing on that front?
Completely right. I think the Hamptons is a prime example. Palm Beach, Miami's an odd duck because it's primary for a lot of people, but secondary, tertiary for many. I think as people take a hard look at their lives and start to reprogram how they live, where they want to raise their children, where the best portfolio allocation and the potential for upside will be, there's a lot of balls up in the air. So with safety, I think is the primary driver of where to place the liquidity. It's in the capital. So for me, I think that a lot of these markets are really on the upward trend of the curve. I think the larger question will be is what does 2 to 3 years look like as inventory is absorbed and as the dust sort of settles on new data points and a new level of pricing, and what that's going to mean in the overarching evolution of these micro markets.
Yeah, I think that's a really important part of this, right? I think we're all just trying to figure out, okay, nobody wants to be, not nobody, but a lot of people don't want to be in New York City right now or any major city where they're worried about the virus or where cases are starting to rise again, right? So they've just either rented a house, bought a house. But I do wonder if you buy a house, that's not something you necessarily buy a house in Greenwich and then come back in 3 years, or do you?
I think it depends on who you're speaking with. I think now is an opportunity for a lot of people. They're foreshadowing where they're going to be and how they're going to live. I think if you're specifically speaking about the ultra high net worth individual or the high net worth individual, they have more flexibility in terms of where they want to be and how they want to live. And in good markets and bad markets, I think they buy based on A, necessity, even though ultra luxury real estate, it does not operate on necessity, it operates purely on desire and function, but B, opportunity. So I think that they can always come back to the city, or they can always sell their expensive Greenwich home to the right person because the microcosm is relatively finite. There's only so many people who play in that segment of the market. So it's really an acute conversation. It's hard to paint with a broad brush other than what we're seeing in terms of the exodus, so to speak, and people looking at other markets where they have not typically been operating in or living in, really taking it on to learn more about the market, invest into that market, and see if it's a place that they can call home for an extended period of time.
Yeah, fair enough. Hey, sit tight for a second, Cody. I got to do a little bit of world and national news, and then we'll come back and continue the conversation. Our guest right now, Cody Vichinsky, founding partner and president of Bespoke Real Estate, joining us on the phone, and we'll dig a little bit deeper into the real estate market in just a moment. Right now, back to world and national news, back to Ed Baxter in San Francisco. Hey, Ed.
All right. Hey, Carol, thanks. A federal judge in Texas has thrown out the case to not count the drive-by voting in the state. It's second state Supreme Court ruling of yesterday. The candidates are out on their last day of campaigning. Donald Trump in North Carolina.
Tomorrow we are going to win this state, and we are going to win 4 more years in our great White House.
Joe Biden picking up on Trump's threat to fire Dr. Anthony Fauci after the election.
Last night, Trump said he was going to fire Dr. Fauci. Isn't that wonderful? I got a better idea. Elect me and I'm going to hire Dr. Fauci.
And the all-important Senate races. Bloomberg's Jeannie Zaino, a Democratic flip.
10 months ago, 11 months ago, we would have said not really likely. But at this point, it is absolutely possible Democrats take the Senate.
Footnote to the election. States and localities from coast to coast are making preparations in case there's social unrest. Here in the San Francisco Bay Area, for example, windows are being boarded up. Police agencies have canceled vacation. State police agencies are working expanded shifts and prepared for tactical deployment. This as new reported cases of COVID-19 in the U.S. hit new national high. Hospitalizations rising in 44 states. New Jersey sees an increase in ventilator use, 6 days with more than 1,000 hospitalizations. New York, some better news. Mayor Bill de Blasio says hospital patient flow has been controlled, and kids who want to go back to school can.
If your child is now in all remote learning and you want your child to benefit from in-person learning, you have an opt-in opportunity starting today, going through Sunday, November 15th.
He also says the number of people who have early voted is absolutely amazing in the city. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Massar. Joining me right now is Charlie Pellet. And Charlie, I mean, you and I both love New York City, and it's interesting, though, and kind of disheartening right now to walk around or drive through it, and it really is just a very, especially if you go into like Midtown, it's just quiet.
It is quiet, and on top of that, too, a lot of vacant stores, depending on where you are, and not just in Manhattan, but you get to the outer boroughs, you're also seeing the same thing there. You know, it's a double-edged sword. At some point, the rents have got to come down, businesses will come in, and those storefronts will reopen. But the story that you and I saw on the Bloomberg, fascinating story here, having to do with developers turning Midtown Manhattan office buildings, not office buildings, but many offices into housing. Not a new idea. There's a couple of doctors I go to that aren't on the ground floor, but they're on the first or second floors of buildings. And you can tell that these are residential buildings, and you can tell that these offices will be ideal as apartments.
Yeah, how great, you know, and especially when you look at, we've talked about this in some of the major cities, whether it's San Francisco, whether it's New York, you know, it's really hard for a lot of people who work there to actually live there. It's not affordable. So, you know, do we see in the longer run, you know, an opportunity for New York City, for example, to rethink the role of some of the office space that is not going to be in use anymore and make it into some residential projects, and especially when it comes to something like affordable housing? Like, this would really be a way of rethinking and maybe recreating a neighborhood within the city.
Yeah, and also, too, a lot of zoning issues, a lot of other issues. I mean, do you want people cooking in residential buildings and the smoke and, you know, the smell of the kitchen? But it would add new meaning to the phrase work from home, wouldn't it, if you're living in a building where you get to go to work in that same building?
Yeah, right. It's no different, though, than living above a restaurant to some extent, I guess. I don't know, which can be good or it can be bad. Anyway, definitely it's a time for developers to kind of maybe think and reuse some of the space that's out there. All right, Charlie, thank you so much. Charlie Pellet, right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We continue to keep an eye on PayPal holding shares after hours. Shares are now down by about 5%. It did boost its annual profit forecast after it continued adding new accounts at a near record pace in the third quarter, helped by the ongoing boom in online shopping. It was an up day on Wall Street, an up Monday with the Dow, the S&P, and NASDAQ all advancing today. Stocks pushed higher. Oil gained as well. We saw the S&P 500 index today higher by 40 points, up 1.2%. The Dow advanced 423 points, up 1.6% at the best level. The Dow had been up 541, up by 2%. NASDAQ up 46. That was a gain of 0.4%. 10-year up 6/32, 10-year yield 0.85%. Gold up 0.9%, $18.95 the ounce. I mentioned crude higher, up by 3.41% at $37.01 a barrel. WTI West Texas Intermediate up 1.2%. Again, up $1.22. It was up 3.4%. Again, recapping stocks higher. S&P up 40, higher by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. I want to get right back to Cody Vachinsky, founding partner and president of Bespoke Real Estate, on the phone in the Hamptons out on Long Island. Cody, one thing I do want to ask you, what are the Hamptons like right now?
I'm looking at my office window, and we use a barometer of traffic, and it is back to back, and it's been a particularly busy off season. I think that term is being diluted as we see it unfold in front of our eyes. People are living here full time, and reverse commuting back to the city and other places. So it's busy, and we have offices down in South Florida. Same concept. A lot of our folks who are in sort of the golden triangle of the Northeast, South Florida, and somewhere in the Midwest Colorado, all those markets are seeing people spend more time there in quote unquote the off seasons.
Yeah, it is interesting. We talked with someone, I think it was up in Aspen, and the same thing that they said, and they're in the hospitality industry, and they said we were doing actually well because this is where people were going, certainly over the summer months before, some concerns about some newer spikes here. So, what do you think? I mean, you understand the property market, and I do wonder, we just did a story in the break a little bit about what's happening in maybe some of the Midtown Manhattan offices, and I know you're in residential, but I do wonder, what are the longer-term trends that you think will maybe stay with us, or longer-term, maybe it's only longer-term for 3 to 5 years, and then it changes again. I just do wonder, when you look at what's been going on, what stays with us?
It's a great question. I don't think anyone has a crystal ball. Bespoke, we are specialists. Our model is we only list properties that are $10 million and above. We don't have any independent agents. We operate more as a private equity firm, with specialists. So we have the unique perspective of talking with people who are of a certain strata in terms of the real estate and what their intentions are. And I think people are ultimately looking at time a little bit more critically. And those that have the luxury to, reprogram where they work from, how much they can spend at home versus going to an office. I think COVID gave everybody a little bit of a gut check as to the reality of what they can and cannot do. And it sort of dissipated these false pretenses that you had to run and rush to an office. It forced people to work from home and spend more time with their family and just think about time in a more critical fashion. So I think from my vantage point, you're going to get a shift in people's desire to be home and be with their family, and also at the same time a yearning to get back towards socialization and being in a restaurant and being with friends somewhere that you didn't feel like there was a potential risk. So I think you have two ships in the night kind of passing in different directions, both of equal importance.
Listen, I'm guessing that a lot of your customers or clients are within the financial community, and we do feel like that there's been kind of a little bit of a back and forth where there was initially, maybe coming off the summer, some urgency and pressure to get back to the office, and we had a lot of stories about traders getting back to the office. And then it felt like we had some other big members from the financial community, like a Larry Fink of BlackRock, saying, you know, I don't think that there are necessarily going to be a lot of people go back, and maybe it's going to be good for the environment that everybody's not commuting into big cities. I don't know. You talk with these individuals. What do you think?
I think there's a balancing act between wanting to ensure that you have a good culture and that you have good performance and that your top line and bottom line stays, you know, in an upward trajectory, but at the same time not putting, you know, people at risk and giving more balance to, you know, the work-life balance. So I think that from my vantage point and who we speak with, it's really not a broad brush conversation. I think for the office space conversation in Manhattan, you're going to see an evolution or a de-evolution of that sort of rat race mentality. You know, when you walk through Grand Central, which I remember doing in my 20s, and you see all the old timers with hats on and umbrellas, I don't think you're going to see that same level of motion. So naturally, the flow of New York is bound to evolve into something new that I think the likes of, you know, upward management has yet to see before.
Yeah, it feels pretty significant, but, you know, we've often had conversation in the past about, you know, people leaving the city and things changing, and then we get back to kind of normal or the way it was before that. Hey, speaking of evolution and changes, an election obviously this week, and I do wonder how you see that and potentially the outcome of it, whether it's Joe Biden in the White House or Donald Trump for a second term, how that might impact the real estate market, especially at the higher end when there's talks of increasing taxes and especially on higher income individuals.
I think that, again, very, very complex answer and a lot to unpack. But in general, I think if Biden wins the election and capital gains are changed to ordinary income, you're going to see a dash of people who have large capital gains to get them done before the end of the year. So I do think you'll have a bit of a crunch in Manhattan as well as other markets for people to you know, sell, who are already in motion to sell. So you're going to have a little bit more of a fever pitch. I think ultimately ultra high net worth individuals, the beauty they have is they don't need to do anything. So patience is ultimately what comes into play, and liquidity is also a very important component of it. And interest rates staying low, access to capital. If the equity markets, you know, they continue on the trend that they are, or they even stabilize, like I think either or, you're going to have fertility for good real estate transactions, good velocity of transactions in these micro markets. And Manhattan, I think everybody there who is a Manhattanite or has some connectivity to it, they're not. It's not a permanent exodus, from my understanding. It may be on an individual level, but Manhattan, from at least the intelligence and the synthesization of the communication I have with these folks, they're looking at more as a buying opportunity to come. So I think, like all things, patience and being astute and being keen as to good opportunity, that's what's ultimately going to drive, you know, market velocity back into places like Manhattan. But if Trump wins, more, you know, people feel great about it. You know, we're on this trend. Maybe they continue to buy real estate as they have been in the past year. If Biden wins, it may very well be the exact same thing. I think sentiment, overarching sentiment and access to capital at cheap interest rates is ultimately what drives market momentum.
All right, going to leave it on that note. Hey, great to check in with you. Cody Vichinsky, he's founding partner and president of Bespoke Real Estate, joining us on the phone from the Hamptons, as he said, properties there, properties office, you know, and they've got offices also in South Florida, so a nice snapshot of what's going on, especially in the high-end real estate market. You're listening to Bloomberg Business Week. This is Carol Massar, and this is Bloomberg.